Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here's your daily technical analysis of foreign exchange markets. I'll start with the euro against the dollar. A second bearish black crow on Friday after the previous session's significant combined key reversal down and bearish engulfing pattern. Prices pushed further down between the declining middle time, it's above, currently at 106.44, and the lower time below, currently 102.74, of the January to May 2021 bearish Andrews pitch. Now this pitch is amazing. It has run the bearish angle of attack for this market for over a year now. On Friday itself, prices punched down and closed below the April 2017 low and finally halted a congestion band 104.92 to 104.51, which has both the February and March lows at the same 104.92 number as a key level. Below this congestion band, we have some fairly free territory until the 103.69 to 103.38 congestion zone, which contains the December 2016 low at 103.49 and the January 2017 low at 103.38. So far today, a move down into the 104.92 to 104.51 congestion zone. It seems to be a determined move lower. Cable, aka sterling against the US dollar. A third bearish black crow on Friday. This time it was a bearish long black Maribozo and continuing to follow on from the recent immediate countering bearish dark cloud cover pattern and bearish double. Prices dropped down and closed below the congestion between 124.78 to 125.09, which contains a 38.2% Fibonacci line of the March 20 to June 21 move at 124.89. It also saw prices push and close below some congestion at 124.36, falling then through a clear zone until some closing congestion from early May between 113.17 to 123.17 to 123.37. And that eroded the bearish pressure enough that the market ended up closing just above the 123 level. Below, we now have support at the June 20 low at 122.48, the May low at 122.54, and the May 2020 low at 120.73. It is all a bit soporific, the support at the moment now. And if prices do drop below the 127, then it brings up the chance that the late February to date action could be a big bearish halfway hesitation. Well, so far today, a slightly higher open, but then a drop down through the June 2020 low at 122.48. Next is the May low at 121. This May low at 121.54 for this year. Euro sterling. A counter to the counter bullish double and bullish Harami, if only just on the latter, on Friday. This is a reaction to the previous session's huge, immediate countering key reversal down and bearish double pattern, which on its own managed to set up the conditions for a possible weekly key reversal down for last week. Despite the setup, all last week managed was a lesser outside week. We still have the opportunity open for a possible cat CS pattern or double stroke triple top pattern formed since May. Overall, we have supports further below from the April 21 low at 84.70, also the broken September 21 to date downtrend, currently at 84.56, which makes up the upper trend line of the extended diamond pattern, then the flatlining long moving average, currently at 84.39. The rising short medium moving average, currently 84.45, and the upper trend line, currently 83.87, the smaller and more robust lopsided diamond pattern. For the moment, though I do not know how much for longer, we still have the following targets on the upside. For the smaller lopsided diamond pattern with a primary target X in the 86.80 area and a harder to reach secondary target X1 in the 87.65 area. And for the extended diamond pattern with a primary target X2 in the 87.15 area and a harder to get secondary target X3 in the 88 even area. Additionally, there is also one final pattern, and it is a big one, which this market had previously triggered but then sent mixed messages on, including last week. Now, I've spoken for months now of this very large falling wedge pattern, currently 84.56 to 81.42. This pattern is still in operation, but it has fallen into the shadows a little with the rising prominence of the diamond patterns. and though triggered, it still leaves us with some serious questions which continue to grow in number. You see, it has the most ambitious upside target of all. Target X5 for this pattern is in the 88.65 area. That is a really big ask. Now, one final point. We were set up by Friday of last week for a weekly key reversal. We needed to close on Friday night either over 85.80 or under 84.94. If we close in between those levels, then we would have a lesser outside week in the end. We end up making last week a lesser outside week. And so far today, we're a lower open, but then a resumption of the move higher. Prices pushed through the capping trend line on the recent market, 85.91, and May high at 86.19. However, have they done that far? They've not done quite just far as that. They're still short of some of those numbers. But I'd like to add something else in the mix. A now possible support. It is the neckline, currently 85.62, of the December 21 to May 22 reverse head and shoulders pattern. This is the extension of the rising upper trend line of the original and extended diamond pattern. It'll be interesting to see how this behaves. US dollar against the Indian rupee. A bullish long white Mariposa on Friday and a second bullish white soldier as well. All fears about approaching the all-time high were set aside as prices moved above and closed over the all-time high at 77.89. The base of the action was supported by the broken lower trend line, currently 77.81, of the broken ascending triangle pattern. Below, we still have the interesting short moving average, currently 77.65, that previously acted as support, and the more formidable lower time, currently at 77.66, of the January to April bullish Andrews pitchfork. So, overall, the market moved up and out of the 74.40 to 77.80 congestion zone that we've seen for most of the last 4 weeks. Prices also moved higher in between the previously mentioned lower time below and the middle time above, currently at 79.11 of the mid-January to early April bullish Andrews pitchfork. This market seems to have settled in between the two bullish pitchforks. Meanwhile, we still have overhead target X in the 78.30 area. This is a potential target for the whole of the 22 action, being a possible, if ragged, bullish halfway hesitation. So far today, a slightly higher open with a prompt move up to reach target X and then drop back down towards Friday's close. US dollar against the Brazilian real. A bullish long white Mariposa on Friday, which I guess can be called a fifth bullish white soldier. The market made a significant move and close higher up over all of the following. The 50% Fibonacci of October 2019 to May 2020 move at 496.58. The declining medium moving average, currently 497.46. And the upper time, currently 496.89 of the interesting but still in early development January to May bearish Andrews pitchfork. This was the first closing over these resistances since the middle of May. Overhead, well, we have some resistances, but they are lesser Fibonacci levels, and I suspect they may not be that robust. We have Fibonacci resistance at 505.73, 507.39, the interesting 38.2% Fibonacci line, the June 19 to May 20 move at 510.87, then 519.41, 520.27, and then the high for May at 520.95. Meanwhile, below we have support starting at the June 21 low at 489.08. Then the 50% Fibonacci on the June 2019 to May 2020 move at 484.26. And the short medium moving average currently 484.54. Now, a point I've raised repeatedly last week, I've been tempted to draw an April to late June bullish Andrews pitchfork. During last week, I resisted the temptation, but I said I would at least wait until prices formally broke over the upper time of the existing bearish Andrews pitchfork. Well, it may only be the one close over the upper time, but I've decided today to draw a contrary bullish Andrews pitchfork for the start of April to the end of May move. The market is right now in between the lower time, which is currently at 480.40, and the middle time, currently 513.25. US dollar against the Mexican peso. A bullish long white Mariposa and second bullish white soldier, on Friday. It was a superb follow-on higher to the previous session's interesting and somewhat out of the blue key reversal up and the earlier shooting star pattern type 2 bullish. The market broke up and closed over the April 22 low at 1971.68 and only broke up over the rising short medium moving average, currently 1997.64, but failing to close over it. Overhead we have the late April downtrend currently at 20.0805, the upper time currently 20.1042, the declining medium moving average currently 20.2304, and the flatlining long moving average currently 20.4041. Key level, well, that key level is the last one at 20.4041 at the moment. So far today, what a superb move higher through the downtrend, the upper time, the medium moving average, and converting all of them into supports. We now have the long moving average overhead, though we have seen prices falter in their rise and slow down ahead of that resistance. Thank you for listening. This short version broadcast gives you essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright ZD Tofpik and ADM Investor Services International Limited. And here comes the final part.